Hi guys, welcome to Olive Board. I hope all of you are doing very well and your preparations for your banking exam are in full force. Today we will be discussing about the 12 important acts in the banking sector. If you like this video, do not forget to like, share and subscribe to our YouTube channel. Hit the bell icon to never miss a video from us. So let's get started. So first, we will talk about the Negotiable Instruments Act. The Negotiable Instruments Act of 1881 was passed while India was still ruled by the British. It introduced negotiable instruments such as the Bill of Exchange, promissory notes and checks, etc. Next, we talk about the Indian Trusts Act. The Indian Trusts Act of 1882 was passed to define and amend the law relating to private trusts and trustees. The last we talk about is the Reserve Bank of India Act 1934. The Reserve Bank of India Act 1934 was passed to constitute a reserve or central bank for the country. Coming to the Indian Partnership Act. The Indian Partnership Act was passed in 1932 to define the functioning and operations of the partnerships in the country. Now we will talk about the Companies Act. The Companies Act is a very important act across all banking and government examinations. The Companies Act of 2013 is an act of the Indian Parliament that regulates the incorporation of a company, the responsibilities of the directors of the company, and the dissolution of a company. We will now talk about the State Financial Corporations Act. The State Financial Corporations Act was passed in 1951 to provide for the establishment of state financial corporations. Let's talk about the Deposit Insurance and Credit Guarantee Corporation Act 1961. This act was passed to provide for an establishment of a corporation for insurance of deposits and guaranteeing of credit facilities. Next, we will talk about the National Bank for Agriculture and Rural Development Act 1981. This act was very important as this was passed to establish a bank that would provide credit for small scale industries, cottage and village industries and other handicrafts in rural areas with a view to promote rural development in the economy. Coming to the Export-Import Bank of India Act 1981. This act was passed to establish a bank for the purpose of providing financial assistance to exporters and importers, as well as for functioning as the principal financial institution for the purposes of managing the exports and imports in the country. Coming to the last three acts in this video, we will talk about Industrial Development Bank, Transfer of Undertaking and Repeal Act 2003. This act was passed to provide for the transfer and vesting of the undertaking of the Industrial Development Bank of India or IDBI to and in the company to be formed and registered as a company under the Companies Act 1956. Now let's talk about the Recovery of Debts Due to Banks and Financial Institutions Act 1993. This act was passed in 1993 to provide for the establishment of tribunals for expeditions, adjudication and recovery of debts due to banks and financial institutions. The last act that we are going to talk about in this video is the National Housing Bank Act 1987. This act was passed in 1987 to allow for the creation of a bank that would operate as a principal agency to promote housing finance institutions both at the local and regional levels. So those are some of the important acts for your banking examinations. If you have any questions, comments or suggestions, Please let us know in the comment section below. If you found this video helpful, please subscribe to our YouTube channel. Good luck for your exam preparation, and I will see you in the next video.